Let us see one more example. S.Y.J.C and S.Y.J.C are partners sharing profits and losses equally. So the profit sharing ratio is 1:1. From the following trial balance and adjustments, prepare trading and profit and loss account for the year ended 2019 and balance sheet as on that date. Trial balance, all the debit balances we have and the credit balances. While reading, you can start writing that debtors go in the asset side, purchases, trading account debit, so you can write TD. Returns. Now see, return is on debit side. It is not mentioned that it is purchase return or sales return. But whenever returns are given on the debit side, those are sales return. It is opposite. And whenever returns are written on the credit side, those are purchase returns. Opening stock, trading account debit side. Land and building asset. Carriage, since it is not mentioned it is carriage inward or outward, it will go to trading account debit side. Rent, rates and taxes, trading account debit side. Drawings, S.Y.J.C and S.Y.J.C. Okay, we'll here have to see what is the method of capital being used. Salaries, profit and loss account debit side. Bad debts, profit and loss debit. Machinery, assets. Here you see it is a hidden adjustment. Additions on 1st October 2018 rupees 10,000. So 25,000 out of that 10,000 worth machinery was brought in on 1st October. This is useful while calculating the depreciation. Advertisement 4,000. Provident fund investment. Sales, creditors, sundry income, capitals of S.Y.J.C and S.Y.J.C. Provident fund, returns, these are purchase returns. Commission, pre-received, commission which is pre-received, and RTD. Then we have closing stock. The adjustments are, the first is always the closing stock. Closing stock will go to the trading account credit side and asset. Depreciate land and building and machinery at 5 and 10% respectively. Go to land and building, tick over there, go to machinery. Now you see here you have two adjustments. Okay, one, here you have two types of depreciation at the rate of 10%. Create provision for bad and doubtful debts at 5% on debtors and write off 1,000 at bad debts. So this amount which is given in rupees is new bad debts and which is given in percentage is new RDD. So you have to tick twice on debtors and you have bad debts. So here also you have to give 2 ticks. RDD which is given in the trial balance will be subtracted from this bad debts after giving these effects. Goods worth rupees 3,000 was sold but no entry was found in the books. On recorded sales, tick on sales, tick on debtors. Outstanding carriage rupees 500, tick on carriage. Goods worth rupees 8,000 were purchased on 31st March 2019 and included in the closing stock but not recorded. Unrecorded purchases, tick on purchases, tick on creditors. First we post everything: debtors, assets, purchases, trading account debit side. The ones in the colors are adjustments. Always mention the name of the firm in the books of S.Y.J.C and S.Y.J.C. trading and profit and loss account for the year ended 31st March 2019, debit side and credit side. Returns, these are sales returns. Those will be subtracted last at the end. Okay, any further adjustments if they are there, first do that to sales or purchases and finally you will less returns. So 800 at the end. Opening stock, trading account debit side, land and building, they have adjustment. So leave a line land and building. For depreciation, leave a line asset side. Carriage, Trading account, it has an adjustment. Rent and rates, profit and loss account. Drawings, since we are not making any separate account, it will go to the liability sides. Less drawings. Okay, first you have to write the capital, leave a line for net profit or net loss, and then less drawings. Salaries, profit and loss account. Bad debts. Bad debts have a full format. Since we have all the items related to the bad debts, you have to leave 4 to 5 lines for that. Write bad debts 1000. These are the old bad debts. The format for bad debts is bad debts, that is old bad debts, add new bad debts, add new RDD, less old RDD. Old bad debts and old RDD are given in the trial balance. This is the old bad debts and this is the old RDD. Old RDD has to be subtracted. New bad debts is given in amounts 1000 and new RDD is given in the percentages. Those both have to be added. Machinery has an adjustment, so asset side, leave a line for the adjustment. Advertisement, profit and loss. Provident fund investment is an asset, so profit and loss, asset, provident fund investment. Sales, trading account credit side. Creditors, balance sheet liabilities, sundry income, profit and loss, credit side. Capitals, they will go to the balance sheet liability side. You will leave 4 to 5 lines for each capital. Supre 35, Atre 35. Provident fund, only provident fund is a liability, so the liability side of balance sheet. Returns, it is on the credit side, so these are purchase returns. Commission pre-received, this is pre-received commission, so this is a liability, hence it will go on the liability side of balance sheet. Commission received in advance 800. RDD is the old RDD which we have already put in the format of bad debts. After finishing the postings, let us go to the adjustments. All these adjustments will have two effects. Closing stock is 23,000. First effect, trading account credit side. Second effect, balance sheet asset. Depreciate land and building at 5% and machinery at 10%. Land and building is 10,000. So 5% of 10,000 you have to calculate. Land and building 5% will be 500. So 500 is your loss. Come to profit and loss. Write to depreciation, land and building 500. Now machinery has an adjustment. So you have to make a working note. The date of additional machinery is 1st October. So the additional machinery is used only for 6 months from October to March. So the depreciation also will be for 6 months only. Total amount of machinery is 25,000. So the machinery which is used for the entire year is 15,000 at 10% for 12 months, which will be 1,500. The additional machinery which was purchased on 1st October will be depreciated at 10% but only for 6 months, that is 6 upon 12, which will be 500. So the total amount of depreciation on machinery is 1,500 plus 500, which is 2,000. So depreciation is 2,000. Total amount of depreciation of land and plant will be 2,500. Create provision for bad and doubtful debts at 5% and 1,000 as bad debts. First effect you have to give in the debtors. here. First, add the unrecorded sales 3000 because bad debts adjustments has to be the last in the debtors. Any other adjustments has to be done first. Add the unrecorded sales, add them to the sales also. See, here we have unrecorded sales, first add to the debtors and add to the sales amount. After that you have 43,000 debtors, less 1,000, you will get 42,000 debtors now. From this 42,000 you have to reduce 5% new RDD, which is 2,100. Now the total amount of debtors is 39,900. These two amounts, 1,000 and 2,100, will go to the bad debts format in the profit and loss account. Bad debts, that is old bad debts, add new bad debts 1,000, add new RDD 2,100. Total of these three will be 4,100 less old RDD, which is given in the trial balance 400. Total bad debts for the year is 3,700. Unrecorded sales, add to sales, add to debtors. Outstanding carriage, add to carriage 500, total becomes 1,700. Second effect, as it is outstanding, outstanding will be on the liability side. Unrecorded purchases, add to purchases 65 plus 8, total is 73, less the returns which we had in the trial balance, total purchases are 71,500. Next effect is add unrecorded purchases to the creditors. Total creditors are 31,000. So here we finish the adjustments and their two effects. Now we start totaling. Add all the credit amounts of trading account, add all the debit amount of trading account. Total will be 1,10,200 on both the sides. Credit amount is 1,10,200. Subtract the total of the debit. You will get 19,000, which is the gross profit. Carry this to the profit and loss account on the credit side by gross profit brought down. Add the credit side, which will be 21,000. Add all the debit side till 4,000. Add all these amounts. Subtract it from 21,000. You will get 6,600. You will get 6,600. This has to be divided. This is the net profit. This is the net profit which you have to carry forward to the capital accounts, SUPRE and ATRE, in the equal ratio. Since it is profit, it will be added to their respective capitals. Total them. SUPRE is 35,000. Add the net profit, it will become 38,300, and less the drawings. Total of SUPRE is 35,300. ATRE's capital was 35,000. Add the net profit, it will become 38,300. Less the drawings, it will become 36,300. Now you have all the adjustments done. Now you total the asset side and the liability side. The total of both the sides will be 1,13,900. Here the sum tallies.